Let's get a look at what's going on more broadly at a macro level and certainly how it's influencing currency markets at the moment. Luca Santos joining us from ACY Securities.
Morning.
Luca, it's been a week of central bank moves. Surprises? Well, we can expect that under Donald Trump, can't we? Well, I guess that was highlighted too by what we heard from Jerome Powell, where uncertainty was the key word, wasn't it?
100%. And that's exactly, I think 2 weeks ago, I've been here and I told you, look, man, tomorrow can be a completely different thing from yesterday. So expect a lot of uncertainty this year because, you know, it's coming from I think the market, just talking a little bit very briefly about Donald Trump here, I think the market took Donald Trump wrong this time because everyone was believing that Donald Trump would make the stock market great, the currency strong, as he did in 2018, 2020, that era that he came in and do like that golden age of the USA. And then everyone was believing good. Trump, we're getting power, we're going to buy stocks again, and that's going to be the second golden era of US. Well, things are going a little bit different from what the market was expecting, and it will continue to, in my opinion, for the next few months. And I think the market didn't sort of believe yet that this is not the bottom. This is just the beginning of a much more deeper continuation down on the stocks. Because all the money from US are flowing into Europe and flowing into China. So outflowing from US, that pretty much shows to us that there's no confidence, there's no literally believing on what Jerome Powell may be saying or even Trump may be saying. And I find very interesting because Trump made an X or Twitter, whatever you want to call it, saying that the Fed should cut interest rates.
Yeah.
Because the tariffs will come in handy in April. That's what he said.
Well,
so
he's made that point. He wants to cut regardless of what's going on.
Of course. And that's exactly what everyone is believing, that he's doing all of this just for Jerome Powell to cut. You know, and I don't.
So you do believe that he's engineering?
Oh well,
a
I
slowdown.
don't. I don't, because if we think about it, right? If he's trying to do all of these tests of, you know, tariffs and taxes and everything, Jerome Powell doesn't care. He's just going to continue to do his job, and he will continue to, like, there's actually one of the parts on the meeting, he said, the market seems to like the higher for longer. You know, so that's, I don't know if the market likes the higher for longer, but that's what Jerome Powell said. So if we think that he literally don't care about the tariffs, he literally don't care. He even mentioned that, yes, the tariffs will be somewhat of inflationary pressures in the, you know, the beginning of the tariffs, but maybe in the future, we don't know, maybe the population gets favorable with the tariffs, let's say, and then that doesn't surge any more effect into the inflation. But even on the economic projections from the Fed, you know, from December to March now, a few months later, they've raised around 0.3 to 0.2% higher inflation projections for this year. I can't remember the numbers, it was somewhere around 2 or 2.3% last year, the projection for this year, and now they're expecting 2.5 to 2.7 this year. So a bit of a stickness into the inflation would definitely be there. And if they're projecting that, you know, high inflation, you know, high stick inflation for longer, why they would cut 63 basis points? I do believe on a 50 maximum for this year, only 2 cuts. We do have one I think is in October, if I'm not wrong, a 35% chance of cutting another 25, but that's very uncertainty, that's too far. I believe on a July or June cut, and then one more later that, and then that's it for this year.
So how's the US dollar responding to this?
Well, we saw a huge drop on US dollar coming all the way. You know, if we look on the chart, on the daily chart, it's very consolidated around 110 to 100. So not much of a change in there. We are trading around 103. 400, 103, 500 at the moment, just on a little consolidation there. I do believe that the US dollar will continue to weakness until 100 on the DXY, until 100. That will make euro dollar go above 1.10, maybe 111, around that. Aussie dollar will gain some sort of value, but then afterwards, maybe, I was having a chat with one of the analysts in ACY, and there are possibility in April that Trump comes in and put a tariff on meat imports and exports. So that will be very bad for New Zealand, and that New Zealand dollar will probably fall around 2% in the whole next quarter.
Yeah, I mean, there's certainly potential focus on beef and pharmaceuticals from Australia, which could be hit as well. Are you feeling perhaps the moves from the Aussie dollar, are they going to be driven by any domestic issues, or is it more a function of what we're seeing with the US dollar? Because, of course, we've got some key events coming up. Well, we had jobs started yesterday. It did take a
very
bit
bad,
before there, given the jobs came in much weaker than expected. Of course, we've got the federal budget next week. We've got the federal election. We've also got another RBA meeting as well.
Well, look, take as yesterday, the market felt that the Aussie dollar fell, more than, I think, 0.6%, if I'm not wrong, yesterday on the release, afterward recovering and later on start to fall again. I guess the market's more paying attention into the tariffs and then any other thing. Reacting off those data, like employment change or federal funds, any of those things will be a reaction, an instant reaction, because that's the data point. But in the longer run, if you want to look on the underlying of the, the market, they are more taking care of like tariffs and what US is doing, because that will have a global effect. We never know who's going to be next. Maybe Australia can be next. Maybe South Africa can be next, or whatever, who can be next. But certainly everyone in the world will be impacted by the tariffs. I most can guarantee you that. If not directly, maybe indirectly, but imports and exports will be definitely affected. And the currency maybe will do some gains or losses on that as well.